Hello, Paul Gerrard, back again to talk to you about income. Today we're talking about residency taxation. So if you're a non-resident, this isn't going to be as applicable as a resident. Residents are taxed on their worldwide income. So we all know that if you earn income from an Australian employer or any employer, you're taxed on it. But the same applies to any overseas income, whether it's an Italian pension or a property that you might own in Malta, whatever it is, you're potentially going to be subject to Australian income tax. So that's a really important thing. What else are we taxed on as a resident? Basically anything you receive, and it can even be discounted shares. An employee share scheme. The discounted value of employee shares may be taxable. Now, if you work for the likes of Commonwealth Bank and you take part in their exempt employee share scheme arrangement, it's concessional, okay? There's a fringe benefit rule that protects and gives you a slight benefit there, but you're still going to be subject. You'll have a employee share scheme PAYG statement that shows that exempt benefit. But if your employer, let's say you work for Google and Google will give you some massive bonus and give you a whole chunk of shares, yes, it's UK, it's US, not UK. Those shares will be assessable income if you're gifted them by the company, and there's a process that they'll go through to assist with reporting that income to not only the Australian tax authorities, they'll be reporting that one to the Internal Revenue in the US as well. So important to get these things right. Other forms of typical income that you might find can be foreign income. If you work overseas for a period of time, it might come into it. Things that aren't assessable income though, prizes and winnings. So if you win Powerball, tax-free, don't have to worry about that. But let's say you win a prize at your local bank. Bad news is that's assessable, and we might need to know about that, the nature of how how that came about. Special rule that applies to taxation of financial inducements by the likes of banks. Other forms of assessable income can include capital gains. And again, if you use our tax checklist, using that yes, no or unsure response for each question, provide us with the info, okay? We'll help guide you and tell you whether it's assessable or not assessable. And sometimes we do find that things that you think are assessable won't be, or there could be a concessional treatment. So don't be afraid of asking. I think there's more to be gained from reporting and missing income, and later being asked by the ATO to explain why, for example, you closed a UK pension, you didn't tell anyone, because that's assessable income here, okay? So, and they do report from the UK to Australia, and it's very common that we get the response in about 12 months' time to ask why the income wasn't reported. So let's get it right, and that's our job as your tax agent, to help guide those sorts of things. So if you're not sure, give us a call, give us an email, and otherwise we look forward to seeing you on another one of our YouTube videos, on our YouTube channel or on our website, and we'll speak or see you soon. Cheers.